be relevant tools relative to the auction. How much weight do I give the actual open as a reference throughout the day? It's a good question, Jim. I mark the open every day. So on this chart, for example, I have the open marked right here. I have my open swings are marked by orange. Here's my opening swing high, opening swing low. And, you know, for example, when price came back up to opening swing low, you can see what happened. We started getting rotation back down. I can see VPOC now for the day is, sure I got that. VPOC on the day is down at 21 now. Was up at 23, back down to 21. But again, here's my opening swing high. Here's my opening swing low. When price came back up to the opening swing low, you can see what happened. We had weakness, strength at the bid, and opportunity for another trade. Now, some of you have asked me about scalping, and opening swing high and low for the day can offer great opportunities when the print supports it for doing that, for scalping. And then again, in the overnight, these closing swing high and lows, I just cannot even tell you how many times they act as unbelievable support and resistance levels on the ES in the overnight sessions. So I hope I answered that question. So I give the open, I mark it and I give it relative weight at the beginning of the day. And so I look at the auction as price comes back to the open, right? So at the beginning of the day, if, let me go back to it. Beginning of the day, I'm looking at the open, and what I'm doing at the open is, and this is where you use order flow as a process for context, is above the open. Here it is. Above the open, let's say price moves above the open like this. What I'm looking at is, all right, price is moving above the open. I want to know what kind of strength these buyers have above the open. How much commitment and conviction are they having above this open? And I can see the price moved, but I can also see when this first time when sellers actually stepped back in, they were effective at being able to push price down and through the open. And if price starts rotating through the open, once it starts doing this, I really don't give it much weight at all. I mean, it may be relevant if price moves very far away and the first time back up to the open like this, there may be an initial bounce. But once in the morning, the open becomes irrelevant, meaning price is just passing through it. It has no relevance as a place where buyers and sellers have any kind of conviction or interest. I let it go. I keep it there throughout the day, but once it proves not to be a key level to the market, I just let it go. Does that make sense? Do I look for confluence of the volume cluster area levels and volume profile? If so, how do you give weight to them relative to each other? Great question, Wayne. And fortunately, that's what the rest of the week is for, is to take. Tomorrow we go through volume profile and the elements of the volume profile, so you understand that. And then then there's going to be a test tomorrow. And that test really is for you just to kind of cement what you've learned in the last 2 days and give you a framework for some questions on Wednesday. But that's what this is all about, is then taking the volume profile and volume cluster and momentum. When am I giving more weight to a volume cluster that shows activity at the bid? When am I giving more weight to a volume cluster that shows activity at the offer relative to the volume profile? So we're going to, great question. If I went through that now, I couldn't go through that without going through all the elements of the volume profile. I couldn't do it effectively. So it's a great question. Please keep that, Wayne. If for some reason I don't go through that, ask it again. Yep. Yeah, no problem. Actually, what it tells me, Wayne, is that you're kind of getting it and you see a correlation, you see a relationship. And so it tells me that that you see an opportunity there, and which is great. That's awesome. And I can tell you there is an opportunity there, and we're going to go through it. Does the RTH market profile stop advancing automatically at the end of the RTH session, or do you draw it at the end of the day? Again, the market profile session I don't really use. It's the volume profile. On this chart that I showed you, it will stop advancing at the end of the day. It just stopped. Like on Friday, there it just stopped. And then at the beginning of the day, I just click, open, bring it to the end, and I'm good. It'll build automatically to the end of the day, and then it stops. Hope that answered your question. Do I think volume profile is well applicable to FGBL? Dirk, if you could spell that out for me, that would be great. I don't think I know FGBL. Yes, I would say absolutely. I have not traded that. We can certainly take a look at that. My goal is by the end of the week is to be able to show you literally in any market, including stocks, how you can, if you're trading options, how you can use the volume profile to identify areas of trade and be able to trade stocks or options more effectively as well. And the reason I can say this, not just from experience, is that the volume profile is nothing more than a representation of buyers and sellers' activity. And it shows where they have interest in price, and it shows where they don't, unfair and fair prices. And once you understand that, and you can get some confluence across some different time frames, you really have some powerful levels to make trades with. And it's in all markets, because again, the basic principle, and this is why I pound my head with people about this, is that every market is an auction. So why wouldn't you use a tool set that, like OFA, that focuses on helping you read the auction? It's it's like I don't know, going to a circus and bringing a bowling ball expecting to bowl. It doesn't make any sense. If you're going to the circus, bring some popcorn and expect to see clowns. If you're trading in an auction, use tools that are auction related.
Mark, I'm gonna jump. I was gonna jump in with some questions if you're through the list there.
Yeah. Yep. Pretty much.
I see Jim just posted something displayed during the session. How do you turn them on? Well, the value area doesn't have specific lines. It's represented by the price level where the histogram cuts off from one to the other. So okay. Anyway, I kind of wanted to play devil's advocate a little bit here, because we obviously have there's a room full of people here who have paid good money to come and sit into a class, and I want to make sure that we are bringing value every single day. And sitting back looking at some of the questions, I could tell some of the questions were leading into a process that or an application that we're likely to get into further along in the course. And that always happens. I mean, the minute that you're into a course and you see something that interests you and you want to ask a question, and I heavily encourage that. What's surprising is I didn't see a lot of questions about the actual content of the day in terms of really the foundation that you went through. So just for my own understanding, because I'm kind of treating this as though I'm your student right now, even though this is my tool set, but I very much want to get the most out of this. And I guess would my understanding be correct that the overall objective for today was to kind of lay the foundation of why these pieces fit together, and not necessarily how they fit together in terms of step 1, step 2, step 3 to take a trade, but in the sense that I shouldn't drift off on any of this, because at the end of the day, I have to believe, or as you said, realize that there are these truths about what I'm looking at, and my reluctance to kind of let go of what I'm doing and actually focus on this is, there's a that could almost be, I guess, troublesome in some regard to looking at a course like this. And what I mean by that is, I'm always creating and developing and evolving as a trader. And so whenever I teach a class and I say, well, this is exactly what I'm doing, and then 6 months later I'm looking at something else and doing something else, and somebody says, well, gosh, I mean, why are you doing that if this is what you taught the last time? And what I love about what I got out of today is that you're looking at all of these pieces and you're saying they're all here, and there's not any need to look anywhere else or to do anything else or to add anything else, but you really have to get these pieces and have the belief system that, and I don't mean leap of faith. I mean, look at it and say, A plus B equals C. I get it. The only thing that's going to move price is the buyers and the sellers. The only thing that's going to make my trade work or not work is the trade that comes in afterwards. I want to make sure that that's what the goal of today was so that I kind of get that sense that everything fits together. We're not teaching you a magic trade today, DB, but instead I just want you to know that as this week progresses, if you don't have your head around what we talked about today, it's going to give me room to drift. Is that a fair assessment?
That's a very fair assessment. If you don't, these things, and you have to go over them kind of again and again and hear them, like I told you, I'll be repeating these things over and over again. But if you don't have these as kind of fundamentals, guiding principles for your trading, my experience and my experience with other traders is you'll be following what you believe to be the next great thing. And in my experience, the market is an auction. OFA toolset was built to display the auction. In order to trade effectively, there really is nothing more than I can see that anybody would need to trade effectively in many different markets or instruments. So that's correct, and that's why we start with this. And I want to make sure everybody is at the same place, so that when we start getting into trades, again, the print and the volume profile, what you see on your chart is all you have, and the print is truth. You will always have uncertainty and ambiguity in the market. If you lean on that, you will always second guess yourself, and you will be a nervous trader, and your psychology will fall apart. If you lean on what you know is truth, what the buyers and sellers are actually telling you, you have a significantly better chance of controlling your risk and managing your patience and your trades objectively by what you see in the auction. And so yes, if you get these principles, these truths, then what you will see and what the goal is of this course is to show you that you don't need anything else to trade effectively with.
And I think that's exactly what I was looking for. Part of the reason I asked that and kind of went around in a big circle, I know there wasn't probably a full coherent thought there when I was asking, but I could even feel myself while you were going through the chart. I could feel myself trying to grasp something. You were saying, okay, well, there's a weak print here and a strong print here, and this is where it was. And I kind of felt like for a moment there, maybe I missed something. Should I be 100% clear on what it is that you're talking about?
No.
Looking at it, and that's what I was kind of getting at, is that I think after that I took a step back and said, I think he's giving us an overview of what we're going to learn, not
this isn't what you're learning, right?
Yeah. Okay.
Right.
I just wanted to be very clear because
yep.
I want to make sure that everybody has. If there was a moment there where I felt like I was too stupid to understand what was going on, I didn't want anybody else feeling that way as well. So
that's a great clarification, and I certainly don't want anybody feeling stupid. What I would tell you is, when I started learning this, and it was literally about 1:30 in the morning when I ran across some article, I couldn't even tell you where it was from, that talked to the market auction theory and what market auction was. And it hit me like a light bulb once I finally started understanding what this means to my trading. And it took me years to get to the point of understanding it. The whole course was developed, and the sequence was developed so that people's learning curve could be increased greatly. So I don't expect that people will get this after today, but my expectation is why we're going to do the test tomorrow, and then we've got some homework to do for Wednesday and Thursday night, is that the test is probably going to generate some more questions, but by the time we get to Wednesday and Thursday, specifically in the homework areas, even if somebody doesn't have, I don't want to say the right answer, or didn't answer something in the homework, when we go through it in the morning, there's going to be this much faster, oh yeah, oh yeah, okay, got it, okay. And so it's sequenced so that the learning curve is dramatically increased. And what I would expect is by Thursday, and we get through the homework on Thursday, at the very least, people are going, oh yeah, oh, okay, I get that, I get that. And then it's a matter of repetition. So today was getting you to say, look guys, your psychology is probably killing you. And your psychology is killing you because of the unknown. And anytime a human being gets into an uncertain, unknown, ambiguous scenario, it's a proven scientific fact that your ability to interpret data objectively goes down significantly. It's why the term choke comes in sports. Goes down significantly. And there's no greater place than in trading where you experience that. What I need you to do is to understand that this is an auction. These are the auction tools. These tools show you strength and weakness of buyer and seller, who are the only ones that are going to take your trade to profitability. As you learn to read them in context and in print, your trading will become significantly better because you will understand what it is they're trying to do, when you're likely going to be right, and when you need to manage your risk.
Excellent. Well, thanks so much for addressing that. I see there's another question on the board, a couple of them, so I'll
and real quickly, there was a question about the value area lines. There is a setting. Let me just find it here. There is a setting in the volume profile. It's right here. Show arrow labels. Just say true, and you should be able to see these: value area high, value area low. This is VWAP, and that's VPOC. And sometimes these get a little bit, covered up. It doesn't really matter to me. That's why I make the colors the way they do. I make the colors so it's. Go ahead.
You'll see in the settings that you can put it behind the chart, you can put it in front of the chart, to the right, to the left, and really it's because there's no perfect place to put all those things. So, I think once you guys play with it, you'll notice that you can kind of switch the orientation around enough to where if the labels, if you can't see them because price has been going back and forth over the same area, then you can flip it to the other side. You'll get the hang of it. So.
Yeah, and when we go through volume profile tomorrow, what I'm going to teach you is what's relevant is that you use the volume profile to identify these levels. And once you've identified these levels, you can put them over here on your chart here to just to give you the reference point, like on this chart, on your order flow chart. Trust me, this won't take long for you to kind of see through this, and there's nothing even to see through. This provides a structure. It's just what it is, what it is. And that's why I make these colors very specific, because I can quickly say, okay, top of value is 24, bottom of value is 20. We're rotating nicely within value. It just helps me interpret the market very quickly. So good question. I hope that helped. Are my closing swings from previous days upper and lower value areas? No. Closing swings are literally the last push by buyers and the last push by sellers of the day. And we're gonna go through when we start identifying and doing the homework. I'm gonna show you how to mark those. Good, thanks, Ralph. Oh, good, good. And he says some minor ahas are forming. Good. And you know, today and tomorrow, I don't mean this to be kind of drinking from the fire hose, but it's a lot of information. When the pieces start coming together, even tomorrow, as we start talking about volume profiles, as I start talking about the volume profile and you understand the elements of the volume profile, you're going to quickly start to see where the opportunities are and how to relate this back to the order flow and the print, and then the volume cluster analysis and the momentum analysis as well. The connection isn't going to take real long. I think I'm just trying to save it for the, you know, like a magic show, right? I'm save it to the end there. Yeah, you're welcome, Michael. I can't stress to you, order flow to me, it's kind of like the way I describe it, or describe it to myself, is back when I was in junior high. I feel like I'm talking to my kids now, but back when I was in school, we didn't have calculators, and we got a piece of paper and a pencil, and we had to do the math ourselves, and we had to know the equations. And now you have calculators. You just punch in numbers, and you get all the answers. Well, um, a lot of kids these days don't know how to do the math. And I go to places and somebody's trying to make simple change and they can't even make the math and in simple change. And what I can tell you is it's the same thing with trading. If you come to rely on indicators for your trading, I know this because I experienced it. I blew up accounts because of this. If you come to rely on indicators just for your trading without getting the context, yeah, you will blow up your account. You will lose. You won't win consistently. You'll get into a trade and you'll hope. You'll have what I call please God trades all the time. Please God, please God, please God, please God, all the time. When you start to do the math and you can use the order flow to understand context relative to some of the other things that we have, the initial pushes and the volume profile, I'm telling you, in the market can do anything, but in every market, you are going to have more control over what it is you're seeing, and the patience that you will start to gain in terms of waiting for areas, because you inherently understand that by waiting for that area, you have minimized your risk and maximized your risk-reward ratio. When you begin to understand those things, it can control and get patience, and then take the trade when it presents itself. You will find yourself at a different level of trading. And any nuance that comes from there, for example, DB talked about doing other things, will just simply be to help you see the auction better. So I don't care what newfangled thing comes out tomorrow, what somebody might come up with. You're going to be able to weigh that in relation to understanding the context of the market and the auction, and be able to quickly say, that's a bunch of bunk. There's no way that they can do that. There's no way that that can be effective. And you're going to be able to see something, like I saw with OFA. This is a perfect example. When I saw OFA, I said, holy cow. And DB, I said this from the very first phone call we ever had. I said, this is it. If there's any way of reading the market and displaying the electronic auction, this is it. Nobody does it better. This is the tool set. So when you find something that helps you read the print or read the structure and the context better of what buyers and sellers are trying to do, then add it to your repertoire, or find a nuance within a specific instrument. For example, oil. Oil is different than ES, not just in volume. And oil and CL, when we start looking at it on Friday, is in terms of levels, volume profile is a good tool. But oil, especially within the day, can be very mechanical in its levels. And when you look at pullbacks, retracements, and extensions, and I'm not just talking about Fibonacci, but when you look at retracements and extensions, oil becomes this incredibly mechanical tool. And when you have these levels that line up with your volume profile, you start to have confluence for amazing trades in that instrument. Gold is similar to it, but of course gold is a very emotional product, and I don't like gold just simply because this is just a personal opinion, I'll get off it, but at any given time during the day, oil can rocket higher or crash lower without any warning because of what some Yahoo did in some part of Africa. Who knows? So it's just very, very much a volatile commodity. But anyway, you will start to be able to go to different instruments. For example, somebody talked about the 10-year note, I think it was, and start to identify the nuances of the auction for that note. You'll start be able to play with the probe and rotation and the strength and weakness settings, where you can dial in a very effective portrayal of the auction for that instrument, because you're going to understand the fundamentals. You're going to know what you're looking for. And once you know what you're looking for, it's just a matter of working with it to get it. And so, like, to me, if I don't get my money out of the ES, I'm moving over to CL. I'm moving over to oil, and I can get to meet my profit target for the day in oil.
Mark, I just want you guys are more than welcome to stay and chat and answer questions. I've got to run to a meeting.
Yeah.
We're slightly overdue where we were, but I just wanted to thank you very much for the presentation today. I'm anxious to see tomorrow. I know even I need to go back and review some of this, and so as soon as I have the recording ready, everybody here will get an email. It'll go into the course homepage. Just wanted to say thank you again, and I'm going to cut off, but by no means does that mean everybody else needs to. But I will see you guys in the morning.
Okay, thanks, DB. And then you'll end the recording now?
George is actually running the recording, so whenever you guys are done with your discussion, he can flip it off. I don't want to cut it too early in case there's something.
Yeah, it's about noon. Yeah, I think that I'm from a significant standpoint. It's just more of clarification, and I could spend the next 3 hours clarifying things. But I believe that as we go through tomorrow and we start connecting the dots with the volume profile and the other elements that we've talked about today, I honestly don't think it's going to take people. In fact, you'll probably, I don't want to say laugh at how easy this is, but you'll probably make the connections pretty quick with the rest of the tools.
All right. Well, thanks again. Right. And
yep. All right, guys. I think I'll wrap it up as well. Thank you for the questions. Remember, at the end of the day tomorrow, I just get to figure out a way with UDB how to get the test to people. It's not a grade thing. It's just to help you set your level of understanding and ask some questions. But there'll be a test and then homework on Wednesday and Thursday. All right. Thanks for the feedback, gang. We'll talk in the morning.